Now, I would like to invite everyone to the speaker of the day, Mr. Sriram Kannan. Sriram Kannan is an enterprise sales and solutions leader consulting and professional services at Amazon Web Services, responsible for leading the go-to-market efforts in banking and FSI for India and the SAARC region. He is a senior finance, risk, and consulting leader with over 20 plus years of extensive and progressive experience in a suite of areas which includes finance, risk, technology, finance transformation, governance, risk and compliance, BI analytics with proven ability to effectively manage large-scale, multidiscipline programs and exceed expectations in delivery and results. Prior to joining AWS, Sriram was with IBM, having led the banking and financial markets domain for global business services, India and Southeast Asia, where he led transformational agenda for clients that redesign experiences to create new source of value, digitally reinvent operations for greater efficiency, and transform the enterprise through cognitive capabilities, advanced analytics, and digital offerings. Like I said, Sriram has got his expertise in the area of finance, risk, financial crime and compliance, design thinking, digital strategy and blockchain, cognitive AI, big data, analytics and insights. I'm very happy to announce Sriram is also a member of CISI, and he has done the qualification on cybersecurity from CISI as well. Sriram holds a first-class bachelor's degree in BCom from the University of Madras, Chennai now, India, and is qualified chartered accountant, FCCA UK, company secretary, FCIS UK, and security investment professional, MCSI UK, from CISI London in 2005. He was elected a fellow of the Royal Society of Arts, Manufacturers and Commerce for the promotion and encouragement of arts and commerce. Sriram lives in Bangalore with his wife, Sharanya, a classically trained carnatic vocalist, researcher, and performer, and his 8-year-old son, Shravan. Welcome, sir, and over to you. We're looking forward to your engaging session for all of our attendees. Sriram, over to you.
Thanks, Jasneet, for that kind introduction, and I hope I'm audible and my screen is visible as well. Just to check,
yes, yes, it is.
Is my presentation agenda visible?
It is.
Excellent. Thank you, NISM and CISI, for this opportunity. More than happy to share my thoughts on blockchain. I think the agenda is pretty clear. It's an introductory session to blockchain. The reason for blockchain, busting the myth on what is Bitcoin and blockchain, and the reason why blockchain came into existence in the first place, how these technologies actually converged, and its application for business. There are several use cases, but I probably will cover a few use cases that's related to securities and capital markets, and asset control, asset provenance, and some smart contracts and dispute resolution, all of that. And where are we on the consortium piece, all of that. So I'll give you an industry snapshot as well as to what the industry is gone through so far, the disruptions that have happened so far, and the road ahead as well. So that's in brief the agenda. It is set for 60 minutes, and I have already received some questions, and just to clear the air on this topic. And as I traverse through this presentation, I hope some of those questions or queries or clarifications get answered. If not, be happy to take a little more questions given the time that we have. I have a hot stop at around 6:40, 6:45. So without much ado, let's dive deep into the session. Just to bust the myth around blockchain. So many people think that Bitcoin is blockchain. Definitely not. Bitcoin is a cryptocurrency, and blockchain is the underlying technology, which is the distributed ledger technology. So it's clearly very different. And in many of the countries, the regulators have not approved cryptocurrency trading or cryptocurrency speculation, and because of its inherent volatility and inherent risks, both from a currency perspective as well as from a systemic perspective, the inherent risks that are actually present. So many regulators, many regulatory bodies have actually banned or have not endorsed Bitcoin, whereas the blockchain technology, which is the underlying distributed ledger technology, which actually has originated from a white paper by Satoshi Nakamoto, is actually I mean, we really don't know who Satoshi is. Could be a Japanese, could be an Australian disguised as a Japanese, whatever, because it's not very clear. But the fact of the matter is that it kind of revolutionized the concept of what a distributed ledger is and how technically by using certain advanced hashing technologies and cryptographic technologies, how a secure proof, a future proof secure ledger that is transparent, that is immutable source of record can be created, and have participants collaborate over it. And also, I mean, the paper pretty much started and stopped with the technology, but not with its application. But then, as pretty much any other uh, technical white paper that usually comes out in its application-oriented form or avatar, this too found its way into the application mainstream, where several use cases have been and are being built given this underlying technology, which is blockchain, broadly called distributed ledger technology, DLT. So clearly, why blockchain? Why now? If you step a little back, take two steps behind, and look at history, some of these technologies have existed for quite some time, but they have been operating in silos. I mean, for people who understand cybersecurity, and for people who are qualified in some of the cybersecurity technologies, a public key and a private key is not an alien word. These hashes and these crypto blocks have been stored, have been used for various interventions, technical interventions across security landscape, across IT architectures for quite a while. Similarly, a distributed database, I mean, for all database professionals, for all technology professionals, this is a no-brainer. I mean, this distributed database, which is a version of a relational database, has been there for quite some time, for decades. And all of us have been using it in various size, shape, and form, both in our personal and professional lives. So there's nothing new with distributed database, I mean, clearly. And from a consensus perspective, from a building credibility perspective, I think all of us do business in the hope of being trusted, in the hope of arriving at a consensus, in the hope of shaking hands on a particular deal. We used to call it gentleman's agreement those days, which was actually a contract that both parties will have to honor. So all of these practices and technologies have been there for quite a while. What blockchain did was to blend all of these together, so to say. We call it the convergence of these technologies that were earlier operating in silos, and then you kind of meshed it all together into one single framework or one single platform, thereby calling it a distributed ledger platform, which actually harnesses the best of all of these technologies. You have a crypto technology that gets through hashing. You have a distributed database, which is basically your ledger is on a distributed database. And you also have a consensus protocol that ensures credibility, transparency, immutability. So all of these earlier technologies that were operating in silos shook hands and blended together to form a distributed ledger technology, also known as blockchain. And since the advent of this technology for the last couple of years, obviously, technology is no use if it cannot be applied contextually, right, to solve problems at scale, right? First to solve problems and then to solve problems at scale. So clearly, blockchain as a technology, distributed ledger, found its way through several of business applications, day-to-day life that we use, some of which you can see here, given its features and attributes of being a shared ledger, having a lot of built-in privacy, transactions are authenticated, secure, verifiable, serves the purpose for audit trail, and also entering into contracts, right? I mean, many businesses and many of us in our individual capacities to enter into contracts. It could be a rental contract, it could be a supply chain contract, it could be a vendor agreement, it could be any such contract, right? A contract to purchase, a contract to sell, a contract to transfer, a contract to insure. So there are so many contracts that we actually enter into on a pretty much daily basis from a livelihood perspective. So blockchain, obviously, given its broader participation, lower cost, and a good amount of verifiability and ease of use and efficiency, kind of gained its way or paved its way, pushed its way through business. So therefore, it found its way to a lot of use cases, some of which we will dive a bit deeper as we move on. What the industry has been up to, this particular slide is, it gives an India-centric view. I thought it is quite relevant for this audience to understand the India-centric view. There is a global view as well, where the adoption is pretty high, the innovations are pretty rampant, and the use of these technologies are slightly on the upper side of the curve or the quadrant. But the India context, we have also been quite innovative. We have seen banks adopt early into this technology. I personally, in my earlier role at IBM, was instrumental and a contributor in forming one of the early consortiums at Axis and ICICI, along with Yes Bank for Mahindra and Mahindra. So clearly, some of these banks are early adopters. And there are a few consortiums as well. As we speak globally, there are several consortiums shaping up, more than 20 plus, but India too is not alien to the concept of blockchain consortiums. So we have consortiums, and that's been a clear early adopter move. The regulators are also extremely keen and have been extremely proactive and sensitive to global regulations in this regard, very receptive to policy changes by the US Fed and the SEC, and kind of interchange notes and have a certain policy stance and a policy view. RBI is no exception either, and has come up with very clear directive on the do's and don'ts of this technology, and the adoption, and how these technologies can impact while they converge. Similarly is IRDA, the insurance regulator. The regulator also understands its impact on compliance and the larger compliance regime. So I think that's a positive move on the regulatory side. Similarly, we have the exchanges and fintech startups who are actually contributing to this ecosystem pretty rampantly, right? I mean, the whole fintech ecosystem is pretty much built on the edifice of open source. In a philosophical way, right? Anybody can actually assemble a team, put together an innovative construct, have regulatory sandboxes, work with regulators on regulatory sandboxes, and do something very innovative and in a very agile, iterative mode. This is no exception either. And we see governments also, adopting and embracing these technologies, be it land registration, be it property registration, be it fighting cyber crimes. I think we have, so there is an equal amount of representation, industry-wide representation amongst various stakeholders, both public and private, as well as large corporates and consortiums. So that's a very healthy trend, and that's a very healthy angle to how we see this industry actually panning out, given the fact that this is a very new, nascent technology. And some of its applications or use cases, as we call in technology terms, are probably bucketed broadly into three types, right? You have some value use cases, some network related use cases, and use cases that bring in a lot of innovation or disruption to the marketplace, right? So broadly, these are the categories that we have observed, that I have observed, given my few years in this area as a business leader in this area. So these are some of the constructs where most of the use cases pertain to increasing efficiency, debottlenecking, or creating a very seamless throughput of operations, streamlining operations, removing intermediaries, creating trust and transparency across a network, having as many participants as we can to actually be a part of the network, stay involved, engaged, and contribute to the network, not just in terms of technology, but also domain value in terms of what the use cases could be extended, how you could cross-pollinate ideas from telco into financial services, how you could look at healthcare, potential healthcare contracts, all of that, right? So I think that's a very interesting horizontal use case type. And of course, it's all about networking, right? I don't mean social networking, I mean technical networking, right? Because it's a distributed ledger, and that's pretty much resident on a core distributed through nodes. I'm not getting too technical here. I'm quite conscious of the audience, and I understand that most of the participants are from a regulatory background. Therefore, it is important that some of these use cases harness the power of network and ecosystem and platforms, right? Therefore, because today, a recent case is the Geo platform, right, which we are very aware of with all of that big bang announcements. Geo trying to create an ecosystem for India, a networking ecosystem, a telco ecosystem for India, and a retail ecosystem as well. So eventually, what we see is the whole industry converging into platforms, and everything is as a service model, right? I mean, so we are clearly seeing, and blockchain as a network, as a technology, lend itself very seamlessly to bringing to life those use cases and those platform plays for various market participants, as well as for consumers of products and services. And then innovation, I think it's all about innovation. The fundamental premise of Satoshi's paper itself is very innovative by blending together various technologies that we saw a little bit earlier, which were actually operating in silos, but then they converged beautifully to bring a lot of innovation to this particular sphere of business and to this particular dimension of technology. So those are the broad use case types. A bit of understanding on consortium. So why consortium? I mean, I think it is important to allude to my earlier point on increasing use of platforms, increasing adoption of platforms by consumers of all types: retail, corporates, large corporates, SMEs, SMBs. Increasingly, if we introspect at our own lives, we have been consumers of various platforms, right? Digital platforms. You look at Netflix, you look at Amazon Prime, you look at Sun Next. So digital media is on OTT, right? Over the counter platforms, which was earlier cinema halls, theaters. I'm not making an extreme statement that all those will be defunct and this is the new order. No, I think both will operate in parallel for a while. We see the sands shifting beneath us, tilting more towards digital platforms as far as media goes, given the existing pandemic, health pandemic that all of the whole world is kind of engulfed in. Similarly, even in financial services, there's been a lot of platform play. You look at telco, there's a platform play. Different products, different services, data services, voice services, payment services, transaction services. Increasingly, we are becoming a very services oriented world, not just an economy, right? Needless to mention, Uber, Ola, Swiggy, all of these are services that we consume, right? On demand services, on demand food, on demand retail, on demand cosmetics, on demand healthcare, right? So there's a lot of service play that's actually that the economy has shifted. In fact, even I remember Raghuram Rajan once mentioning that many of these services and their drag-on effects are probably not even factored, measured, or monitored in our GDP, right? It's more our GDP is the numbers that are being reported are predominantly the brick and mortar, predominantly the legacy old world economy that actually gets reported because that is measurable, manageable, quantifiable, hence reportable. But many of these services and the downstream effect that the services economy actually generates is quite difficult to quantify because of its difficulty in measuring, difficulty in actually understanding the butterfly effects of consortiums, understanding the butterfly effects of platforms, right? So all that is also a reporting challenge, a country reporting challenge from a regulator perspective. But without too much digressing, I think consortiums enable that platform ecosystem. If you clearly see financial services is a leader, it's a no-brainer. There have been 20 plus consortiums worldwide in financial services, and this data is as of 2019. I'm sure there are much more. We see so many banks, BBVA, JPMC, Goldman setting up blockchain labs. We see telcos operating blockchain labs. IBM has been involved in the Hyperledger Fabric Consortium, and we have formed quite a few consortium. We are part of a global consortium. We are part of a national consortium on very specific use cases that we see are quite emerging amongst the financial services sector as well as the telco sector, telecommunication sector, right? So I think it is very important that the industry at large embraces the consortium play because the whole premise of consortium is there's a technology partner because the fundamental edifice of blockchain itself is an underlying technology. So there has to be a strong technology partner. There are bankers in some cases in the financial services sector. There are insurance companies because they bring in the domain expertise. After all, what's the use of a technology if it cannot be contextually applied to a domain to solve problems at scale, isn't it? So this consortium itself is a composition of various stakeholders, various participants. You have a technology participant, you have an industry participant, you have an enabler, and you have a platform play that actually orchestrates all of this and then brings to life from a distributed ledger perspective, right? And the application of it. Some of the critical success factors to measure the effectiveness of consortiums, to measure the operating efficiency of a consortium is pretty much funding. I think clearly R3 consortium has raked in more than $100 million given its wide membership. I know, so I think that is extremely important for a consortium to stay alive, to work on use cases, to explore or push the boundaries in existing use cases, in existing technologies, and I think all of those attributes that we see, funding, membership, leadership, governance, because there are different stakeholders, you need to have a proper hierarchical governance structure, operating model, all of that are extremely critical in a consortium or a platform play.